Everyone, today we have a highly requested video. I'm finally pulling back the curtains and doing a deep dive into my personal stock and ETF portfolio on done. I will be walking you through my 1 year growth, my exact asset allocation, and the sectors I'm heavily betting on. Plus, make sure you stick around until the end of the video because for the last couple of minutes we need to talk about a massive elephant in the room, the brutal stock market correction we saw this week in July 2026, driven by a global tension and banking sector shock. Let's jump right into my screen, and this is my sector 1 year growth portfolio growth. Okay, all right. You should be seeing my Dhan dashboard on this screen right now. The especially looking at the 1 year timeline. The green represent my overall portfolio value. The blue line in my direct stock investment, and the light green is my ETF holding. Okay, that is my ETF holding. As you can see, I started scaling this specific portfolio up heavily on around October 2025. There was a massive spike in the capital deployment there, and since then, strategy has been beautiful. Beautiful. Notice how stable the light blue ETF line is. It acts as an anchor of my portfolio. Meanwhile, the uh, dark blue line is where the volatility and a massive growth came from, especially from May 2026 onwards. You see that stock line just going parabolic, dragging the overall green line up with it. This visual perfectly represent my combined stability of with a high conviction stock can build a serious wealth. Okay, now let's jump to my second thing, asset allocation and performance. Let's move on my actual portfolio distribution. Now I have backed up the exact investment capital of for privacy reason, but the percentage tells the whole story. Look at the split. I'm currently allocated 64%, 60 around 64% in a direct stocks and 35% around 35% in a ETF. I currently hold zero mutual funds in this specific account. Now let's talk about the absolute standout metric here. My stock portfolio is sitting around a staggering 106% profit. My stock picks have literally more than doubled. On the flip side, my ETFs are showing a slight loss of minus 2.37%. This is exactly why asset allocation matters. The heavy lifting done by my individual stock picks have completely overshadowed the slight underperformance of the broader market ETF right now. Okay, sector breaking and key holdings. So, what exactly is driving that 106% stock return? Let's look at my sector allocation. As you can see, my portfolio is incredibly concentrated. I'm not a fan of over diversifying. Massive 58.78% of my stock is sitting with a quick service restaurant space spread around just two stocks based on my holdings summary. Restaurant brand Asia, which operator the Burger King, is my I just hold a small quantity of stock with it, but my biggest holding is United Food Beverages. My second biggest betting is computer software and consulting, making up 27.17% across four stock. I'm heavily betting like Infosys, TCS, and alongside heavy growth techs like um, KPIT and Newgen. Okay, KPIT and Newgen. Rest of my portfolio is spread around across small satellite bets, insurance distribution 5% around, rating services 2.74%. Names like IEX, IRA makes up the small single digit allocation concentration, builds wealth. My heavy bettings on QSR and IT are paying off actually. But I would say like IT is not performing well, but I have a conviction that I in future IT can do very well. That's why I'm holding the things for IT. Then now let's get transition to broader market because it has a brutal week for Indian equity. Yeah. If you have been looking around your portfolio this week, you aren't alone. If you saw some red during the week of the July 20 to July 24, 2026, Nifty 50 fell by roughly 567 points, closing down at 23,767. Sensex took a massive hit as well, declining over to 2,000 points to settle at 76,000. So why is the stock market falling right now? There are two massive macro triggers. You need to be aware of those things. First one is global tension and crude oiling. Escalating tension in Middle East, specifically between US and Iran, have pushed the Brent crude oil dangerously high, crossing the 90 to 100 dollar per barrel mark recently. Since the India imports over 80% of US crude oil, this spike renews the fear of inflation and widening trade deficits for India. And banking sector drag. If you can see, banking sector have heavy weightage in our indices, and it got hammered this week. Biggest shock came from SCFC Bank's quarter one yeah, financial year 27 result. They reported their interest margin falling at record low of 3.26%. When biggest private bank in the country showed a margin compression, it drags the entire Nifty and Nifty 50 down with it. The silver lining, IT stock shocked the whole, showed some whole resilience and saw some buying support, which helps protect portfolio like mine that are heavily allocated to the software sectors. I would say at the end, times times like these remind us why we don't I don't sell. Market correction are normal, especially when valuation gets stretched. Stick to your conviction, hold good businesses, and use the depths to accumulate. If you find the value in the portfolio breakout, please hit that like button, subscribe to channel. Let me know in your comment section below what is the biggest holding in your portfolio right now. Thank you for watching. I will see you in the next video. Bye bye.